This is the second and final part of the candlestick guide. So for those of you who landed on this video without watching part 1, go to the description right now and click on the link to watch part 1 first before we get into this video. Otherwise, let's go ahead and get started where we left off. So the first step into trading successfully using candlesticks is we need to understand and be able to recognize patterns that these candlesticks form. And what do I mean by patterns? What I mean is the candles forming repeatable things in the market that you'll see over and over and over again. And some of the patterns, some of the more common patterns I'll go over. This pattern right here is what's called a bearish engulfing pattern. What do I mean by this? That means candle number 2, the second consecutive candle after the first one, the second candle, it's a bearish candle, meaning going downwards, and this whole candle, the body of the candle itself engulfs the body of the first candle. This is a bearish engulfing. Now this pattern on the right, it's the same exact thing, but this would be considered a bullish engulfing. Why? Because the body of this candle engulfs the body of this candle. And I've drawn these a little bit differently, showing you that this one doesn't have a wick, meaning this one opened here and it closed very strong, meaning the sellers were definitely in control in this case. And in this example, there were wicks all throughout, but overall, this is a very bullish candle. Now, I want you to think about this candlestick pattern, this bearish engulfing. What does this what do these two 1-hour candles look like in terms of a 2-hour time span? And I want you to think about it. This pair, this candlestick here would look like this. These two candles translate into this one candle in the 2-hour time frame. And as I mentioned earlier, this is a very bearish candle. Why? Because the price started here, went up, and then the sellers took control, and the price ended right down here, which is represented by the second candle. Now, the same exact thing on this bullish engulfing. What does this look like in terms of a 2-hour time span? This looks just like this. It opened here, this time span opened here, went all the way down, went all the way up, and it ended up closing bullish. So this shows a sign of rejection in the bullish direction going upwards. That's how you'll be able to put these patterns together as the first step into determining how you're going to be looking for these profitable trades. The next pattern we're going to talk about are the tweezer bottoms and the tweezer tops. I want you to kind of notice what type of stories that these candles tell. So I want you to imagine this candle started here, went all the way down, closed here, and the next candle opened up here, went all the way down, and then closed all the way at the top. This tweezer bottom shows a rejection to the top side and signaling a potential bullish outlook going in the up direction. And on the opposite side, this tweezer top, what happened here is the candle started here, went up, closed over here, and the next candle opened up, went up, and then it closed right here at the same spot where the previous candle opened. So if you think about and combine these candles, you'll notice that this candle pattern creates this right here. The open and the close were in the same exact spot. This is what's called a doji. And pretty much what a doji is, there are many examples of dojis. All the dojis mean is the open and the close are in the same exact spot, and whatever happened in between creates the wicks up and down. However, the stories that these dojis tell are completely different based on what the wicks tell you. So in this case, even though it opened and closed at the same exact spot, it doesn't show indecisiveness in the market. In this doji, this shows that the price started here, went down, and then it continued to rally back up, which shows that the time frame ended with the buyers in control. So this is not showing indecisiveness. This is showing a bullish candle. However, something like this, where the wicks are equal from top and bottom, or something like this, this shows that there is indecisiveness in the market. However, looking at this example, this shows a buying pressure because the candle started up here, went down, and closed at the very top where it opened. This would also be considered a bullish type doji. And going back, looking at these tweezer tops and tweezer bottoms, this tweezer tops, what would that look like? And you guys probably are visualizing it already in your minds, but this would look like just like this, right? It would look like these candles going down, the candle moving up and down. And matter of fact, this bottom, this wick would be right over here. This is what this would look like. So being able to kind of look at these patterns and recognize them whenever you see them on the charts, this will help you determining which direction the price is likely to go. In this case, this right here is a very bearish signal that the price could potentially has a higher probability of going in the down direction. Why? Because the price started here, the buyers were in control, which made this wick, and then the sellers came in with a lot of selling pressure, pushed this market right back down, and the candle closed essentially right where it started, signaling a potential sign of rejection. Now, there are many other candlestick patterns, but the last ones I'm going to talk about are what's called the triple candlestick patterns. So these are what's called either a morning star if it's going up, and you'll notice that these three candlestick patterns started here, came down, and it ended going up. So this would be considered a morning star, and the version going downward, just the opposite of it, that would be called, it was called the evening star as it's going down. And then these over here, this would be considered what's called a three black crows, but in this case they're red, so this would be considered like a three red crows since it's going down. Or the other way of it, the bullish version of it would be called the three white soldiers, or in other words, the three green soldiers, if depending on whatever color your candles are. But I want you to kind of understand the story that these candles are telling you. We notice that this candlestick pattern started here, came down, was very bearish, and then this middle candle created a doji. This showed indecisiveness, and the next candle here had very bullish pressure, which had a lot of buy pressure. And if you think about this on maybe a higher time frame, you'll notice that these three candles put together could look something like this, which also shows a very bullish candle. Now, going the other way around, the story that this tells, this shows a little bit of bearish pressure, not too much, just a little bearish, going down a little bit. And then the next candle shows even stronger sell pressure coming in. And the third candle shows a lot more stronger sell pressure coming in, right? So if you think about these candles combined into one candle, what would this look like? This would look like a very bearish candle, showing a lot of sellers in action, a lot of sellers taking the lead, pushing the price action going downwards. So these are the last few candles that I want to talk about before we move on to how we're able to use these to our advantage and be able to put various different things to be able to get those high probability setups. Now, going to the chart, I'll put it this way. We don't just take those candlestick patterns and kind of just trade based on those. We put a few key things together, and there's three things we take into consideration and look at if you're wanting to trade based on candlestick patterns. The first thing we need to look at is which direction is the trend going. That's number one. The second thing we need to look at are what's called zones of interest. Do we see something that allows us to see a confluence of what the price action might be doing in order to increase our probability that the price would reject in that area? And the third thing we would take into consideration is everything that I just showed you, all those candlestick patterns, and being able to see, do these candlesticks line up in our favor, showing us another signal to go ahead and enter that trade to give us a higher than 50-50 probability for the price to go in our favor. So let me kind of show you what we would do and how we're able to put this together. So here's how we would do it. The first question we need to ask ourselves is, which direction is this overall trend going in? Is this going in the up direction or is it going in the down direction? You can see that these lows are getting higher and higher and higher and higher each time, and so are the highs. These little peaks, these highs, are getting higher and higher and higher as well. So this whole direction overall is going in the up direction, right? So we would be looking for potential buys, right? We would be looking for potential areas to go long. So that's the first thing. The second thing we would look at are there any areas that we can find potentially in the future that might create what's called different zones of interest? So how we would do this, we would employ different technical analysis skills. Just for example, like we would connect the lows to draw an actual trend line and kind of see where the price would go. I'm just going to draw the trend line here, and I'm going to take this little tool here and just kind of extend it to just infinity. Just allow it to go forever, because we'll be using this as a potential zone of interest where the price could potentially go. So Let's go ahead and draw this little trend line here. And now we need to see, will there be a potential zone of interest along with the trend combined with a specific candlestick pattern? So let's just go ahead and play this out. And we'll notice that the price is continuing to go forward, and each candle that passes is just 1 hour of time being passed, right? So as time passes by, we're looking at what's happening with the chart. We're just being patient. And if the price does approach this area, this zone of interest, like it did right over here, we would be looking for a potential signal to go long. So this is the first sign. So this is the second sign that kind of tells us we should be looking at a potential area to buy. Let's go ahead and go to the next candle. So we can see that this candle, it pulled down and it rejected, and the candle closed. I'll zoom in. The candle closed above this trend line, showing a pretty huge sign of reversal, right? The sellers had taken in control, and then the buyers came in and rejected it all the way back up. Now we're just waiting to see what the next candle might look like. So you could take your entry here, or you can wait and see what the next candle will look like. The next candle, what did it do? It created a lot of buying pressure. So you see this. So if you look at this in terms of a pattern, what pattern has this created? This has created what's called a bullish engulfing. Why? Because this bullish candle is engulfing the body of this bearish candle, right? So this shows a lot of buy pressure. Here is where we would understand and find our signal to potentially enter. So what would we do when this candle closes? This would be showing you a very conservative area to kind of go long and enter our long position here. So what would we do? We would put our entry when this candle closes. We would just enter into the market. Our stop loss would be below the trend line, below the last area of rejection. And now we could potentially look at where we would want to take profit in this trade. We would use various technical analysis to kind of see where we would take our profit. And one thing one technical analysis we could kind of employ is just by potentially creating a channel and kind of see where this line would go if you were to draw what's called a channel. So what I'm going to do here, I'm just going to clone this line and line up the tops, and you'll notice that this is indeed connecting the tops. So this could potentially be forming a channel. So where would I take profit on this trade going long? I would take profit somewhere near this top area, somewhere near the top line. Why? Because it's not going past it. It just keeps rejecting off of that top line. So let's just go ahead and hit play, and we'll just see how this trade plays out. Okay, so I'm just going to pause it right there. Notice the price hit our take profit and our trade is now closed. This would have been what's called a 78 pip trade. Looking at how we're able to take these various different confluences into action. Number one, looking at the trend. Number two, understanding any specific zones of interest that we see, which was right here, another touch of this trend line. And number three, being able to employ the different candlestick patterns and use those in our favors to understand that which direction the price is going, using these candlesticks as like a final confirmation. Now, another example I want to talk about is showing Euro AUD. First thing we'll notice is number one, this is going in a down direction, downtrend. Number two, we need to look for specific zones of interest. And what we could do, what technical analysis we could employ is just drawing a channel. Why? Just connecting the tops and seeing if there's a trend line at the bottom that kind of matches it. And in this case, you can definitely see that this is creating what's called a very clear descending channel, right? So now we need to look at a specific zone of interest, a specific area that the price might react. And what's that zone of interest? That'll be anywhere along this area of this top of the trend line. We would be looking for an area to go short, an area to potentially sell, right? So this would be considered like our zone of interest. So what would we do at this point? We would just wait and allow the candles to kind of play. And as the candles are approaching our specific zone of interest, let me just go to the 1 hour time frame now as the price is getting a little bit closer to it. And we would wait and see what the price does as the price approaches our specific zone of interest. So the price touched our zone of interest, and you'll notice, what did the candle do? this shows a lot of selling pressure, right? This is a very bearish candle. Why? The buyers were in control, and then the sellers came in. The sellers came in and pushed that candle back down, and it closed red. It closed very bearish, right? So if we wanted to confirm what the next move would be, we could just kind of wait and see what the next candle does. And this kind of shows confirmation that yes, this is showing a very bearish pressure. So we have three things in our favor. Number one, this is a downtrend. Number two, the price touched our zone of interest. And number three, the candles themselves are showing very bearish pressure. So what do we do here? We would enter our short, we would enter a sell position. And what would we do with our stop loss? Our stop loss would go above the zone of interest, above where the price rejected. And we would allow ourselves to enter the trade, and we would just look for our take profit area, which could potentially be at the bottom of the channel, just like what we did in the previous trade, right? And we would, in this case, I'm just going to allow this price to play out and kind of show you what happens here, right? So you'll see the prices continuing to go. And for those people that might have possibly missed the first entry, you can see the same exact thing happen again a second time. The price went up, touched the zone of interest, and you'll see what happened here is this was a huge rejection candle. The buyers were in control. The sellers came in and pushed it back down. And the next candle created what's called a bearish engulfing, right? This body engulfs the first body, showing a lot of selling pressure. So you could have entered right here as well if you would have missed the first time. This could have been your entry right over here, waiting for the price to go down, allowing the price to kind of hit your take profit. So let me just kind of go to the 4-hour time frame and just allow this to play out. So you can kind of see that the price is kind of moving, and as the candles continue, you'll be able to see the trade play out. Okay, so the price touched the bottom of the trend. So this trade right here would have been around a 600 pip trade, right? So that's an example of how you would find the entries and how you would find the exits. I want to give you one last example. I'm going to get out of this replay tool, go into the live markets and show you what's happening right now as we speak. As I'm recording this, the same concept happens again and again and again all the time in the markets every single day, as long as you know what you're looking for. We're using the same exact channel, same exact thing that I've already drawn from way back here. Nothing is different. And I'm going to get rid of this replay tool, go into the live markets, and you'll see the same exact thing is happening here. Let me kind of go into the 1-hour time frame that's happening right now. So the price approached the same zone of interest, and you'll see what's happening. I want you to look at the candle as it touched the top of the zone of interest. What do you see the next candle has done? The next candle has created what's called a bearish engulfing. Same exact thing as the previous trade that we talked about. And you'll see this, the candles, or the time is actually moving because these candles are moving right now. So this trade that we're in right now, starting from our entry, if you would have entered right here at the bottom of this candle, this trade right now would be an 86 pips profit right now at the time of this recording. This happens again and again and again and again. Let me just kind of go into the 4-hour time frame to see if we can look at it at a different perspective, right? What do you see here? The price approaching our zone of interest. You're seeing the price rejected the zone of interest. The next candle was a very bearish candle. So you could have entered, if you were looking at the 4-hour time frame, you would have entered right here, going into profit instantly right away, going for a sell position. This happens all the time, folks, every single day in the market. You just have to know what to look for, be on the same direction of the trend, looking at areas of zones of interest, and number 3, looking at these final confirmation candles if you do trade with confirmation, because this does give you a little bit more of a conservative approach to trading, allowing you to kind of that last final bit of confidence, that final bit of confirmation before you go ahead and jump into the trade. So I hope this was very valuable for you guys. I hope you took something away, and I encourage you to go ahead and click the link in the description so you can go to the actual trading view charts yourself, so you can kind of play around with it and kind of see for yourself, right? Will this be correct 100% of the time? Of course not, right? But as traders, our goal is to look at opportunities to maximize our win percentages and minimize our losses, right? So the more different technical indicators and fundamental reasons what you can enter into the market, the higher probability chance you'll have at success at finding these high probability trades to enter and be able to create some wealth for yourself and be able to start growing your Forex account. So I hope this was valuable for you guys, and if it was, I do encourage you, please go ahead and hit like on the video, comment down below if you guys did enjoy it, and if you aren't subscribed to this channel yet, definitely do subscribe. And for those of you that are subscribed, go ahead and make sure that you hit that little notification bell, because YouTube generally doesn't give people the notification that I uploaded a video unless you click that specific notification bell to get direct notification whenever I upload a video. And other than that, I'll catch you guys next time. Take care, guys.